Welcome, Rohan, retired into the stock market session 3, March 2nd, 2025. How are you?
I'm good. How are you, Eric?
Wonderful, thank you. Welcome back. First of all, I want to say I appreciate you because you're very astute and a good student. I can tell you're taking to these lessons and learning, but also you're a good listener.
Thank
I
you.
appreciate that. I know you have knowledge on your own, and you don't have to throw that at me. I know there's different kind of students. Some people try to teach me how to trade, and then I can't teach them. So it's nice to have you because you're very open and I appreciate that.
Thank you.
Okay, you're welcome. Okay, now you had a few questions. One is about AMD. I can handle your questions today. Let's start off with a couple of questions. You had about AMD. You bought it at 119. You said, and
Right. And my question was, is it better to sell this and invest in Palantir or Robinhood stock, which seems currently it's at 30 to 40% down?
okay, so good question. I'm gonna have you develop a Core 10, which is called Core 10 stocks list.
Okay.
Stocks
Yep.
list. And that's 10 stocks you can get behind. And the value of that is that you're going to focus on 10 that you can learn about, study, research, and you can really get behind. And that way you don't have to focus on 100 or 1,000 stocks. You're going to focus on these and trade these well and get your benefit from these main stocks.
Gotcha.
You can have a little more, a little less, but you're going to have 10 that you're going to study. Okay.
Okay.
All right. It's kind of like we're focusing is what we're doing. Okay. So rather you trade 10 stocks great or good than to try to learn how to do 50 or 100 stocks and not do them that well, right?
Right. Right.
So focus. If AMD is one of your core 10, then keep it. If it's not going to be one of your core 10, then you should sell it and get a better stock.
Okay.
AMD in general, I think it's probably fine, though I know it's kind of been a slump. It's kind of quiet right now.
Right.
I think it was falling behind NVIDIA in returns.
Yep.
So if it's just, and there's another one, there's Taiwan Semiconductor. Uh,
The TSMC, I guess.
yeah, I actually have it on my list, not my core 10, but I have it on my stocks list, just because I compare this to other stocks. It might be better to do Taiwan over AMD, but I want you to decide that.
Mm-hmm.
If you think that AMD is not as good and it's the same repetitive, redundant to NVIDIA, then Taiwan Semiconductor is 180. I'm looking at the 6 month. First of all, the best chart for trading is a 6 month chart. Write it down. 6 month chart for trading. You can see almost everything you need to see on a 6 month chart. In the 6 month, I have Taiwan Semiconductor 160, and it went up about 220, then down to 180. Okay, so it's up. I'm gonna look at NVIDIA because I know NVIDIA what that's about.
Right. I'm just going to pull up those things in my phone as well. So,
In NVIDIA, I see 108, and now it's 120. Nice 20% move, and the high is 150, 149. Okay.
right.
Now I'm gonna look at AMD, and I'm gonna guess that it's not as good because when I looked at it, it was in a big slump. Now I don't like to buy stocks on their low. I think they're having problems.
Mm-hmm.
So I don't want to tell you to do that. I want you to try to get stocks that are doing great, that are higher going up, not going down.
Right. Because it's been the AMD stock has been going down since October or November of uh, of last year. Looks like.
Um,
So it has been in a downward trend from November,
I
December, January.
actually took it off my list. So the 6 months ago it was 136. Now it's 99. So it's in a slump. One thing about two things I want to say. The 10-year chart is the best criteria for stock selection. One of your questions was about stock selection.
Yeah.
The most paramount one is the 10-year chart. It has to say that you want the stock to be doing well over time. When stocks go in a slump like this, maybe option one, sell it, because you're always, write this down, always be willing to sell your weakest position. Always be willing to sell your weakest position. And that's in the philosophy of trading. Not investing. You can learn about investing from somewhere else. Mostly where we're investing, but we're also trading. We're also looking to get a monthly income, yearly income.
Right.
Not just holding stocks. I don't teach to do that. Anybody can do that. And you might hear, oh, well, NVIDIA is down, why sell it? Well, if it's your weakest position, you can always sell it, but get a better stock. And that's one reason to take a loss. Write this down. One reason to take a loss is to improve the position. One reason to take a loss is to improve the position. I want to talk about Mr. Morgan just a little bit today. Mr. Morgan.
Mr. Morgan, is it?
Yeah. He is a character I talk about. It's
Okay.
kind of like a fictional character, but really he's not that fictional. And if you're trading and getting monthly income and yearly income, you need to be on point. You can't lag or waste time or hold on to a stock that's losing money. Not for that long, anyways.
Right.
I'll just start up. Mr. Morgan is a guy who, let's say he lives in New York, and he comes from old money, and he's not a trader. He hires traders, and he hires traders like me and you, and we're gonna work for him, for Mr. Morgan, and our job is to make money for our clients. And he's gonna start us off with $1 million, and our job is to manage money and to make money. We can do cover calls, we can buy good shit stocks, we can do dividends, but at the end of the day, there's this building on the side that says Morgan Investments, and we're here working for him, making money for our clients, trading, investing. And if we don't make the grade, what happens to us?
Get fired.
Exactly. It's just that simple. We can't afford to lose money. We can't afford to wait with the losing position. And this is one of the differences of long-term investors who don't really do anything, and shorter-term traders who have to make money to pay bills, or if that's their job, they're a money manager. Is that they don't have the luxury to lose money or to make bad decisions. So, Mr. Morgan, as a money manager, if you do well, if you make money, we got into Tesla. We wrote some cover calls. We got some money. We've been working for Mr. Morgan for 6 months. Tesla went up, NVIDIA went up.
Right.
They started coming down, but they're still higher than they were 6 months ago. So is talking about semiconductor, but AMD's down. Okay, so if your supervisor comes to your desk and says, "Hey, we're losing on AMD. What's this going on? We're losing here. This is AMD. Do you see? It's
Yeah.
red. And this. Let's see. Look at the difference. And let me just show you the video, because that was one you were doing. And here's the video. It's green. It's much better. Red means losing money. Green means making money. So the point of the supervisor is he needs to correct problems. And if you're in a position that's just going down, you need to sell that position. Now, you can short, meaning that You're making money as it goes down. You understand the concept? But since we're not going short in general, we're going to have to. The supervisor comes to you and says NVIDIA is going up, AMD is going down. What is he going to tell you to do?
Yeah, sell, get rid of AMD and buy more Nvidia stocks.
Yes, you're just correcting. You're improving. You're taking a loss. You're improving your position. That's all. You don't have the luxury to wait for AMD to come back. I don't care what value you think it is.
Mm-hmm.
Down means down. Losing money means losing money. End of the day, Mr. Moore's going to fire you anyways if you can't make money.
Right.
Okay. Questions on that?
No, that makes sense. That makes
We'll
sense.
talk more about Mr. Morgan. I want you to change your philosophy just a little bit. When you're trading, um, you can't just say, "Oh, well, I didn't sell the stock, so I didn't really take a loss." That's not correct. You need to realize your gains and losses every day.
Mm-hmm.
You can say, "Oh, I bought the stock at 80, so it went down to 60." Okay, and you've lost $20 of share growth. You can't say, "Oh, I didn't lose, 'cause I didn't sell it yet." You don't know if it's ever going to go back to 80 or when it's going to go back to 80. So you can't say, "I don't want to sell it." You have to realize a loss every day. So you lost 20. Even if you haven't sold it, you've lost. And that's one thing I think people get confused, because some investors, say long-term investors, will buy a stock and let's say it starts sliding. Okay, so it's going down. This is Palantir behind me. It's going up. Okay,
Right.
even after it went down. And some long-term investors will say, "Well, I'll just keep it because I'll just buy more as it goes down." There's a story I heard a long time ago. It made an impression on me. It goes like this: a guy bought a stock at 100, and it went down to 90. And he goes on the golf course and says, "Hey, your stock went down from 100 to 90." And the guy goes, "Well, I just buy more shares to average down." Then the next month it came down. Now it went down to 70. "Oh, I'll just buy my shares. I don't care. Average down." Then it went down to 50. "Oh, I'll just buy my shares. Average down." And the next time he came in, the guy dropped dead. So the moral of the story is you can't just keep buying the stock going down. You have to at some point uh, stop the loss, stop the bleeding, and improve your
Right.
position. So I don't want some of the trading we're doing, like cover calls, has to do with staying with the stock, even if it goes down. Has to do with that, and that's for a specific trade. I'm doing cover calls. I want to stay with the stock, but in a general sense, I don't want you to lose a large part of your portfolio. I don't want you to lose even one position or two positions because you were kind of neglectful and you didn't cut your weakest position. You tried to stay with the stock even if it was going against you for so long. Write this also down. Don't fight the market. Don't fight the market.
Yeah.
Never. So we have to understand there's the difference between keeping with a stock that's down and keeping with a losing stock.
Right.
There's a difference. You have to identify what that difference is. Generally, losing stocks have problems. They're not just down for no reason. If they're down for no reason, maybe that's a buying opportunity. But if they're having other problems, I didn't like AMD's CEO.
Right.
She what came on the news channel, and she kind of had the impression like they asked her about earnings, and she kind of said, "Well, I don't care about earnings. I only need to do a good job for the company." Well, that doesn't make me feel confident about what she said. She needs to care about earnings, care about how her stock is perceived by the public. She needs to care about investor sentiment. If she's only worried about running a company by making a product, which is her job also, that's fine, but that's not going to give any faith to the investors. The investors want to be heard. The investors want to be noticed and recognized. if you look at a stock that's doing great, like let's say Coca-Cola, 100 years in the stock market, great dividend stock, all time, one of the all time great good stocks.
Yep.
They have a department dedicated to customer relations, investor sentiment. And they care about making earnings, they care about how their stock is perceived. So I don't want to hear anything about, I don't care about this, you know. Uh, anyways, that's just my opinion. You have to make your own opinion. Okay, so on AMD, um, if you can get some good trades, maybe you can play with it. But if there's really a question, then consider selling it.
Got you.
Now, now when you sell, you're selling what? To improve the position. You can always get back in if you really think you want to get back in. But the nice thing about selling is then you can, once you sell, you can think clearly. You have a clean slate.
Yeah.
You stop the loss. And then if you really think that it's the best position to go back in, then you go back in. Otherwise, go to something else, Taiwan Semiconductor or something else, Coca-Cola. So any more questions about AMD?
No, no, that makes sense.
And if you really
Uh,
want to, we can, not today, but we can look at some trades in AMD, but maybe it's better to stick with pounds here, Tesla.
right.
Okay,
And
go ahead.
quick question, what's your opinion on Hood?
I like Hood. Hood has a good cover call.
Yeah, it has
And
good cover.
they have a PE, which means they have a stock selection.
Yeah. They have a good PE as well, looks like. Uh, Another thing that I was looking at was, yeah, I haven't seen the 6-month growth yet. Let me see. Just checking that. Yeah, 6 month is, it has grown from $20 to $65. So,
Yeah, and that brings me to stock selection. Let's review the stock selection if we
right.
can.
Yeah, that was my
Um,
next anyway. So,
Hood, Hood. Now, I didn't particularly like Hood. One second. I didn't like Hood as an app, as a broker, because I thought they were doing things not so great. But the stock is doing great, so I have to reevaluate.
right.
Okay.
Yep.
I think Hood, like they had the situation where they closed the app when they were doing the meme stocks. The big money was shorting GameStop,
Yeah.
and the public was buying it, and there was a big tug of war. Do you remember that story?
Yep. Yeah. Yeah.
And HUD decided to shut down the app, so they couldn't, or they shut down their trading just for those stocks, the meme stocks, and that caused some problems. A lot of customers complained. But we were able to trade Hood on TD Ameritrade.
Okay.
So it was just Hood that was playing those games,
Mm.
which I didn't care for, but different reasons. But the stock's doing great, and they have a PE, and it's going up. They have a good cover call, so I'm actually in Hood right now. So I readjusted my criteria to include. I I uh, I changed my mind on Hood. Okay. Any questions on that?
No, no, nothing
Okay.
but
Stock selection. You want to talk more about stock selection? We can do all 12 now. If you want to just run through the 12, and we'll talk more about them during the sessions.
yeah.
Which ones do you have so far?
The ones I had was the 10-year chart.
That's the most important one. Go ahead. Number
Right.
two.
Number two was volume.
So it's the second most important one, and that's ideally 2 million a day plus.
That's right, 2 million or more.
And
Right.
if it's a high price stock, then it's okay to have a little bit less.
Right.
Okay. Number three.
Number three was P to E ratio of greater than 28.
Um, yes and no. Any PE is good. It can have 5. It can have 100.
Right.
But higher than 28 means it's sought after. It's perceived as a hot stock,
Okay.
and that's why it's kind of like highly valued, and that's why it says. But it doesn't have to have 28. It's just that any PE is good. A dash or a negative means they're losing money.
Right.
They get an X. If they have a P, they get a check mark. Okay, number 4.
Covered calls should make 3 to 5% per month, pretty much.
Perfect. That's one of the cornerstones of our session of our trading is to do cover calls.
Yep.
Okay, number 5.
Number 5 was dividend.
Good. Any dividend's good, but ideally, what's a good dividend?
Uh, Probably about 3 to 5%, I would say.
Yes, that's yield, which is per year.
Right.
6,
Uh, and stock split.
stock splits, and that's a contrarian one. People will say stock splits don't matter, but they do matter because
Right.
all the best stocks, Microsoft, Coke, Walmart, have Netflix, Starbucks, Nike have had stock splits. And the theory is that if you have a stock split, you'll have more stock splits. And with stock splits, you get exponential growth.
Yep.
Okay, now I'm assuming you don't have 7 to 12.
No, I don't. No.
Let me see if I can remember off the top of my head. Um, let's put 7 as market cap, MC. Market cap should be 50 billion plus, and that's to say that you don't want a stock that's too small. And when I see a stock that's like a billion market cap, which is tiny, a billion market cap is tiny, I'll say you're investing in a company that has the market cap, has the value of a house in Beverly Hills. It's just too small. These small companies get pushed aside, knocked over by these bigger Amazons, these bigger stocks that can dominate the marketplace.
Right.
And when there's an economic correction like the COVID or other situations, these smaller companies sometimes they don't last. So there is a threshold, ideally. And some of the most powerful moves I've seen in stock is when they're passing through the 50 billion threshold. It's not to say that you can't have a stock that has 10 billion or 20 billion because I do have stocks that are below 50, but they don't have the check mark. They get the check mark, they get the approval when they pass 50. But ideally, you have an increasing market cap, and it's going up always, and it's higher. It's either going through 50, like 30, 40, 50, which happened with Chipotle maybe a couple years ago. It's come right through 50, went right up to about 90 or 100. And then they maintain above 50. They don't go back down. So 50 plus increasing. Good.
Okay.
Okay. And then 8 we can do robust share price. Robust share price is U.S. stock that's $100 plus, $200, $400. This is another contrarian move. People will tell you share price doesn't matter. It matters. The higher price stocks are better because they've gone up and up and up and made people money. $200 Apple share price is better than Robinhood share price, which is 50.
Right.
250 is better than 50. If a stock is like 10, where has it gone? Hasn't made nobody money. It's going to $10.
Yeah.
But if a stock is 200, 300, Costco's 1,000. I'll tell you, it's better to buy one share of Costco at 1,000 than 100 shares of a dog pack crap penny stock, which has gone nowhere. So when I look at high share price, I say robust share price. It gets a check mark if it's about 100. Around, if it's 95, 100, that's okay, check mark. But if it's something like under 50, I'm not impressed with it. It just hasn't proven itself. And
Makes sense.
okay, so questions.
No, no, that makes sense.
The fine wine costs more. You know, gold is more expensive than silver. High
Mhm.
share price is better. It indicates quality. Okay. Let's do can it double? Can it double? The can it double criteria means you look at the 3 to 5 year chart. 3 to 5 year chart.
So what is that called? Chain and double, is it?
Can it double?
Oh, can it double? Okay,
Can the stock double?
got you.
That's what it's called. You look at the 3 to 5 year chart. Okay. And if it doubles in the last 3 to 5 years, it's real easy. If it doubles in the last 3 to 5 years in price, then it can double again. It gets a check mark. Because we're looking for stocks. We're not looking to make 10% a year. We're looking to make, we're looking at stocks that double in 3 to 5 years. So if a
Okay.
stock is doubled, then it has a check mark. It can do it again. Um, something like um, something like Apple has doubled, even as big as Apple is.
Oh yeah,
I look at the. Do I have to look at the Apple chart, or do you know that it doubled in 5 years?
yeah, it definitely doubled in.
Tesla, Nvidia, they all doubled, tripled.
Yeah.
Okay, can I double? 10, 11, 12. Let's just put 12 down. I remember 12 is something I added recently. 12 is uh, relevant product or service. Or service. Relevant product or service. Is the product or service in demand? In demand. Um, and that's to say that back in the day there was a. So I appreciate that your age, by the way, because you would remember a company called Blockbuster.
Yes.
Blockbuster was hot. They had a stock. The stock was doing great. It was entertainment. You rent a tape for $5. You take the tape
We
for three
we
days.
used to
You
rent
go
it.
there.
Yeah,
Go
yeah.
ahead.
We used to rent videos, CDs, DVDs, whatever. Go
Yeah, I like going there. They sell candy up there. They had a little Blockbuster card.
yeah,
Come and get my three cassettes, and I go and then I don't return. I'm late. They charge you a fee, and they
yep.
charge you a fee if you don't rewind. Like they charge you $1 if you don't rewind. They rewind it for you.
Those are everywhere, all over.
For a time, that was a good business, but what happened to Blockbuster?
Yeah, Netflix took over. They started streaming and yeah.
What
So
happened is the product changed. It was no longer relevant, and they got
yep.
replaced. So you have to be on the lookout for your company. There's another one, America Online.
Hmm.
America Online was like the first
Internet service.
internet. Yeah,
Yeah.
did you have your email? Did you get your email? It was a big thing, email.
Yeah.
And then you would log on to a modem that would
Yes.
have a sound like, and then it would finally connect because it would be a dial-up modem. And
Yeah.
all these things have changed, and now internet's no big deal. There's 100 internet companies, and American Online didn't do anything special to be the number one. So they also were not relevant after a certain point, and they actually had a point where they were so hot they bought Time Warner Company, and they merged Time Warner with American Online, and they ended up having to kick Time Warner back out because it just wasn't working. But they were also replaced, and now and what would you do, Rohan, if somebody came to you and says, "We're going to invest in movie theaters. It's going to be the best thing. We're going to have popcorn. We're going to get movies. People are going to come to the movies and bring their girlfriends. We put all the money in movie theaters." What would you say?
No, no, I wouldn't agree to that
Why not?
because there are so many companies with movie theaters, and that's constantly changing. Then
It's kind of going down. Back in the day, do you remember there was a big lines,
yep, yep.
But now people are watching Netflix in their house.
No, yeah, it's. I mean, the thing is, the movie comes out within 2 months. It's available on streaming, and everybody has pretty much like home theater systems and stuff like that. So it's
So that's why
theaters
the
and
relevant
movies are
products is
available.
important. Now, what's relevant right now? What's relevant is like artificial intelligence, AI.
Yeah.
Quantum computers, that's hot. But so always look at that. Even if it's a good company. Someone told me a story about there was a company that made boots for kings. I don't know if you heard that. They made leather boots with plush for kings and princes and barons. And it was like a 100-year-old company. It was so great company. But when the monarchs started getting replaced by by senators, and then they were no longer needed.
Yeah.
So always look at the marketplace if your company is in demand. Okay, there's two more. 10, 11. I think one is going to be, can number 11, put number 11. Can you buy the product easily? Number 11 is, can you buy the product easily? This is important because I want you to be able to go out and buy your product or service. Starbucks, every corner.
Yep.
McDonald's, every corner. Netflix, $20, it comes to your living room.
Right.
But if you wanted to, to buy Palantir, you have to be, a government agency or some kind of rich person.
Yeah.
So Palantir does not get the check mark on that one.
Uh,
Some,
no,
go ahead.
but they're changing the model, right? They're trying to make it available for commercial as well.
Okay, so you said a good point. Trying to.
Yeah.
So once they do that, then they'll get the check mark.
Mhm.
But obviously, it's not good because let's say the government cuts back. They're worried about the government cutting back.
Right.
I don't think the government's going to cut back on Palantir. I think they're going to cut back on wasteful spending. But because they're relying on the government, that's always going to be problematic. Okay, question on that.
So
There's some companies that have like a soda beverage, but you can't buy it. It's in Timbuktu, you know, so that wouldn't get the check mark. You have to be able to go out and get it where you are.
right.
Questions on that?
No, no, makes
And let
sense.
me try to remember 10. It'll come to me.
Okay.
It'll come to me as we go. Give me a minute on that one. I want to ask you the other question you had for me. Let's start with that. What's the other question you had for me? Oh, I have it here. Oh,
At what
this is
point?
just this is new all-time high. Write this down. Number 10. NATH. Another contrarian move that I've learned years ago is it's okay to buy a stock at a new all-time high. Why? Because when we find out these stocks, Microsoft, Netflix, Nvidia, when it hits a new all-time high, they tend to keep hitting all-time highs, which is to say that it's better to have a new high than a new low. And the new lows you can avoid because they're having problems. The new high you can actually buy it there because the theory is that it'll keep going up. So don't be afraid to buy a stock at a new time high. Even if some people say, "Oh, it's too high," you have to wait till it comes down. No, not really. If you're investing in a stock, if you're doing cover calls, or if you're long term, there's no reason why. It's actually a buy signal when it breaks and it breaks out
Mhm.
because it's showing that investors are confident, stocks going up, and it'll end up having more and more and more all-time highs, which has happened in Apple and Netflix and Microsoft and all these companies, Meta. Okay. However, I'm not saying like if a stock has a great verticals like this, I'm not saying just to keep buying it like this. So with caution, But this kind of thing is happening behind me. People are taught by society, oh no, it's too high. You have to buy when it comes down. No, I don't. We don't do that. We buy it when it's breaking out. Okay, so new all time high. It is a contrarian move, but it's something I learned from. Actually, I learned it from William James O'Neill, who did Investors Business Daily newspaper. I learned that from him. Okay, there's the 12. We'll revisit them more throughout the session, and without the meetings. Any question on that?
No, we're good.
Okay. We talked about AMD. Talked about stock selection. You had two more questions, which was one was about when to buy the stock, and the last
Yeah,
question was about the leaps.
that's right.
Um,
So how long leaps? Yeah.
if you vet your stocks and you get, let's say, 9 or 10 check marks out of 12, you can always buy your stock right away.
Okay.
The best time to buy stock is today and do a cover call. I always say. In theory, you can wait for a pullback. Like if you have a huge vertical, in the stock, you can wait for a pullback. I won't tell you not to do that. But at the same time, you don't know that it's going to pull back. You don't know that. So unless you have a crystal ball, you can't always time your buys perfectly. So you can just buy anytime. I don't have a really problem with that. The theory is that when you get in your stock, you stay with it to get your returns. When you do cover calls, you're thinking I'm doing 10 cover calls a year, so I'm gonna get 5% a month. That's 50% a year. So you're gonna stay with it for a year, for example. So you put the patience in, and if you put the patience in, then you don't mind if it pulls back because you're gonna overcome your share growth loss with premiums, with a longer term uptrends. Question on that.
Yeah. So question is on the satisfy the criteria, right? These 12 criteria to select the stock. How many should we, I mean, should it satisfy?
So this is
Well,
something that you need to take. You use your better judgment. Okay. You might see me doing one with 5 criteria, but that doesn't mean I want you to follow me. I'm taking a high risk if I don't have 5 criteria. Some of the new stocks that like IONQ
yeah,
doesn't barely have 4 or 5 criteria. But the reason I'm in it is because it's a quantum computer. It's hot. It has a great cover call, and so it's not gonna have a 10-year chart.
yeah,
It's not even have a three. Barely has a 3-year chart. Doesn't have a PE, but it has what you call a free trade, which I want to talk about today if I can, just briefly. But for you, I would prefer you, like as a student, as learning, try to get something that's ideally 7 or 8, at least 7 or 8 out of 12. But if you're doing something with 4 or 5, just be ready for a huge correction. Like it's not uncommon to have a 50% correction in a stock that's volatile, in a stock that has 5 check marks. So you buy it at 20, be willing for it to go to 10, and don't be surprised. You buy it at 100, be ready for it to go to 50, and that's not even a stock market crash. That's just the stock going down by itself.
yeah,
Understand?
yeah, yeah,
But do I think Apple will get cut in half? No. Do I think Coca-Cola will get cut in half? No. McDonald's, same thing. Philip Morris. But these other IONQ, sure. Yeah. Rigetti, sure. You know, you see my point?
yeah, yeah,
So you have to pick your level of safety, I think. And it's better to err on the side of what? Caution. So that's my advice. Ideally at least 7 to 8 plus. I don't think any of them have all 12. So if you get all 12, I would say that's very unusual.
yeah,
But if you're getting if you're doing it for a cover call, then ideally you have a great cover call. I think we talked about Rigetti because it already went down, right?
yeah,
So that's that. So you're buying it at a better price. Plus, has a great cover call, and I think it has 100% return within a year. Am I right? Something
yeah,
like that. So it's
that's
kind of
right.
like I don't see how you can really lose money as long as the stock doesn't evaporate, then you'll be okay.
Yep,
And if the stock goes down, I don't think you should probably sell it if it goes down, unless it's really your weakest position and you can't seem to get a good cover call on it. I probably wouldn't just stay with it. I probably wouldn't even sell it. if it was getting you the returns, income. Okay, your last question is about, is that enough for that?
That's enough for this.
Your
Yep.
last question is about leaps. I actually wanted to talk about that today. We talked about Palantir last session, and then we can continue. One thing, I sent you a picture about Palantir, about the steps going up.
Yes.
If it has steps going up like this, behind me, we call
Yep.
that positive mountains. If it goes up like this, we call it positive mountains or staircase. But I just say positive mountains. There's different words for it, you know. And if it's coming down, and it comes down in like this, humps, we say broken mountains. They're broken mountains. They're coming down. So the whole point of that picture I sent you was to identify a trend. It's to go with the trend. If it's going down, then it's probably going to keep going down. If it's going up, it's probably going to keep going up. So just be aware of that. Just be maybe patient, or don't be surprised if it keeps a pattern. Now, if you look at the picture I sent you, it looked like Palantir had changed. What has a one-up mountain, then it went down again. So it sounds like it looks like it's bottoming out. That's going to come back. So if you look at that picture I sent you, it's showing that the trend of the broken mountains is starting to correct. So we'll
Yeah.
see if it does that. And then the leaps. Okay, so as we're doing cover calls, we're getting monthly income. Okay. And this is kind of goes with our specialized knowledge. And I said specialized knowledge is saying that you don't get this in school or even in college. Even in seminars, they didn't really cover it very well. I don't think they covered it very well. But we talk about selling or writing, selling or writing leaps. This is really specialized knowledge because people don't know that you can have a Tesla stock or Palantir. Today, you buy Palantir for went down to 8,500, and you can sell the 1 year, 2 year, and even 3 year leap. You can sell the upside for 3 years, get that money back. And I was telling you last session, reinvest the money, which I call stacking.
Right.
And now you have money back on your investment, maybe 30%.
Yep.
And now you have, I think you use that to buy Rigetti. Is that right?
Yeah.
And now you have a monthly income on your investment that you borrowed, basically borrowed from the upside of your shares, and then make it a monthly income. And then by the time you get to 2 years, which is the expiration on that option, on that leap, now you have exponential returns. So that's what we should look at. And we can look at that for the rest of the session. We're coming towards the end, but we have some time. Let's look at Palantir first, can we?
Yep.
Okay, so Palantir, we looked at the leap. Did you do a leap on Palantir?
No, I have not done any leaps ever.
Um, okay, so let's look at that. So pull up Palantir, and I see this talk about 85, 84 and change. Now,
Yeah.
Palantir went up 15 cents on Friday. That's important because that shows finally it stopped going down. It's like, it can always go down more, but 15 cents when it's coming down like that is it says something. It says that investors are willing to buy it. They're not just selling it. So maybe it hit a bottom. We'll see. And then so you can spend 8,500 right now, about 100 cents a pound here,
Right.
and sell the lead. Let's do the put first. Which is say that let's just do the money, which is 85 points. You can agree to now. Palantir goes out 3 years. December 2027, 1,020 days, which is awesome, by the way. Here's our specialized knowledge. You can sell the leap 3 years out on Palantir on your shares because the shares, they don't decay. But the option decays. So when you sell the leap, you're agreeing to in this case, to take the stock at 85, go out the money, and it's going all the way to the 85 is
21,
paying
29.98.
uh, Yeah, 27.10 to 29.40. Is that what you got?
Yes, yes, that's right.
You know what?
Yeah, 27.10 to 29.48. I read the last price.
So let's do a limit. Let's do a limit 28. Can we do that?
Mhm.
85. So we'll sell a limit 28. Let's write that down. And you know how to get the rate of return, the return on investment on that?
Mhm.
How do you get the rate of return? Do you know?
Oh, from the leap value,
So we're agreeing to sell the stock at 85 in
right?
3 years. In 3 years, that's just going up to the maximum. And I have here 28. How do you get the return on that?
Oh, how do I get a return on that? No, I don't know how to calculate that.
You take the premium, which is 28.
I mean, you add it to 85, is that what it is?
No, take the premium 28 and you divide it by your cost, which
Oh,
is
okay.
which is
Got it.
which is 85.
Percentage. Right.
So
Percentage.
you go 28, which is premium, divided by 85, 84.92, same difference, close enough. 85,
Percent.
32.94%. Now, that's substantial because who wouldn't want to buy a stock now, or in this case of a put, to agree to take a stock at the same price it is today, knowing it's a good stock? You already told me you think Pound is a good company, which I agree with you, it's a good company. Let's say the stock's doing well, it is going up over time, so it's a good stock. And then in 3 years, just to agree to take the stock at the same price it is now, to get paid 32%, $2,800.
Yeah.
That's what the put is. Does that make sense?
Yeah. Yeah.
Okay, now if they're going to give you, if you're going to agree to buy the stock at 85 in 3 years in 1,000 days, and then they give you 28 points, which is $2,800. What is the break even on this trade?
Yeah, it's 85 plus 28. So,
Uh, no, the break even. We have a wash. In other words, you don't make any. How do you make no money on this trade?
oh, if it falls below 28, 85 minus 28. So,
Yes, yes. Which is what?
88, that's 57.
Now, at 57 price in 3 years, if pound is 57 in 3 years, you have a wash because you got an 85 premium, a 2,800 premium, but you lost $2,800 on what? On the share growth,
On the share growth,
because
right?
you had to buy the stock at 85, and then and the U.S. signed it at 85. It's called an assignment, and then immediately the stock is 57 in the future. This is our
Right.
scenario if that went down. In which case, you've lost 2,800 in share growth, but you gain 2,800 premium. So technically, it's a wash.
Yeah.
But why would that be beneficial? There's one reason, even if it's a wash, there's one reason that that would be beneficial still as a trade. Do you know why?
No.
Because technically, because you were when you get the premium, you can use that premium right away. Notice when you, especially a cover call, buy the shares for 8,500. Write the cover call. Notice that your buying power goes up in your stock account. Your buying power goes up, but your balance doesn't go up because you have a -1 option. You're short that option, that call. When you sell the put, you also short that put. But the put's a little more subtle because when you write a put, it gives you the premium at the same time you sell the put, so it's mixed in. So
Okay.
you have to consider that if you have 100 shares and you buy 100 shares at 8,500, and then you get back 2,800 for the cover call, then you're getting money back, and you can take that money and reinvest it. Okay, With
Yeah.
the put, the thing with the put is they do it in one trade. So in a sense, they'll take $8,500, and if you have a covered put, cash covered put, they'll hold $8,500, but they'll give you back 2,800. So they're only going to hold actually 5,700. So you have to consider that you've done the trade, but you have money back in your account. So instead of having to pay 8,500, you get back 2,800. So actually you only pay 5,800. So you do have money back. That technically is money you can invest. You have to look at it that way.
Okay. Okay.
And then the reason why it's still a good trade is because you had $2,800 to invest for, in this case, for 3 years.
Right.
That's why it's good. So if I gave you $2,800, here, Rohan, here's $2,800. In 3 years, give it back to me.
Yeah.
You have a wash. You didn't gain anything, but you've had the 3 years to invest it.
Yeah.
It's more clear on the cover call. Can we look at the cover call?
Yep.
All right, so you buy 100 shares here, 8,500, and you go out 3 years on the Palantir, and it's 1,000 days, 1,020 days, and the call is on the other side of the put. One side, left side calls, right side puts. The call is paid 35.50 by 38. Now give me a limit, 35.50 by 38.20. Now give me a limit right there. Since we know there's a lot of volume in Palantir, we're not going to just do the bid, which is the market. We're going to ask a little bit more. Give
Right.
me a limit between 35.50 and 38.20.
I would say 36.50 or 37, close to 37.
37. They'll take 37. So on the call, we'll do 37. 37.50 even maybe, but let's say 30, we'll make it easy. 37. Okay. So you're going to take $8,500, buy 100 shares, and immediately write the cover call for 3 years, and get back 3,700. And that 3,700, you'll see your buying power go up by 3,700, which means you can buy $3,700 more in stock. You
Yeah.
can do Rigetti, you can do Sound, you can do Robinhood. Okay. And the return on that, 37 divided by 85 is what?
Yeah, that's 43%. 43.5%, 5.2.
That's pretty phenomenal, huh?
Yeah, that is.
Who wouldn't want to buy a stock here and have a 43% return and have that money back you can invest for 3 years?
Yeah.
Now, come if you fast forward 3 years, a couple of things are going to happen. One, that option is going to fall off. It's going to decay.
Mhm.
At -1 call. So you're just going to have 100 shares at, let's say Palantir didn't move in price. It went up and down and came back to 85. You're going to have 100 shares of Palantir 85. $8,500. You have your investment back, but you have the $3,700 to invest for 3 years. Let's see what you did with that.
Yeah.
If you bought Rigetti and Sound and Robinhood, then you have all those shares and you have all the cover calls you got on those. You see. So it's a little more clear when you do the cover call because then you can see it a little better. But the put is just as good. It just has to do with how you can see and perceive and manage your account and see what's happening. One thing I want to talk about is the free trade, which is simply to say that since you have margin, Rohan, they're going to only hold a percentage of, it's called right there, maintenance. Maintenance.
Actually, I wanted to correct you. I don't have a margin account yet.
Okay.
Yeah, I will probably have to apply for one, but get that approved at some point.
Well, apply for margin, and what you're doing, you're not taking any risks. All you're doing is having a higher level trading.
Mhm.
And I'm not telling you to go on margin, but they will only hold a percentage, not the whole cash. So technically, you're in cash right now, which is to say that everything you buy is in cash. It's kind of clunky, you know. But once you do margin, it flows a little bit better, and then you're gonna you get a better return because you're going to have more room to do stuff. It's just simple like that. And if you do a cover call on, well, the free trade, you have to have margin account to do free trade. And here's what I
Okay.
want to say. If you pull up on your Fidelity, if you pull up, I don't know, Palantir, okay, PLTR, I believe Palantir is 30% maintenance. Are you able to log in quickly, or you want to do that later?
I can do that later, but I can log
Yeah,
in with my phone here, see if I can.
you're not going to be able to see it on the phone. You have to look at the web app. I want you to, this is your homework. Find the maintenance for Tesla,
Okay.
maintenance, maintenance for Tesla. Find the maintenance for Palantir, and also find the maintenance for. Did you say you're doing Rigetti?
I did buy Rigetti last
And then
week.
the maintenance for Rigetti. What you'll find out is that the maintenance for each one is different.
Okay.
Oh, and do the maintenance for Hood. Hood. Each maintenance is different, and that means that they're going to hold a certain amount of money when you buy these shares, when you sell this put. Same difference. And the free trade goes like this. Another thing about specialized knowledge. Have you seen my Quora my Quora answers on Quora app?
No.
Okay, so I wrote an article recently on Quora. I write articles mostly about stocks, but sometimes I write about other stuff. It was about real estate, and the article went something like this. Somebody was complaining that rich people don't pay taxes. Okay, and I said, "Oh, you're worried about that?" So I wrote an article about how a rich person can buy what's called muni bonds, munis
Hmm.
that are tax free, and you can buy as many as they'll sell you. I mean, you can buy millions and millions of dollars in muni bonds, and if you're getting let's say 3.5% a year, kind of like a dividend stock, but
Okay.
the muni bonds are tax free. So you have $1 million, you can get $35,000 tax free income if you invest in muni bonds. If you have $2 million, you get 70,000. So the example was a rich person puts $2 million in muni bonds. He gets $70,000 income tax free every year to spend tax free. And then they also um, they also have a property, okay, and they can take a loan out on their property, okay, because they're a rich person, they have property, and they can take a loan out for let's say 200,000, and that money also is tax free. They don't got to pay tax on a loan on their house. They do have an interest on the loan, but here's the thing: it's not that uncommon that your house value goes up. So in a way, the interest is offset by the value of the house going up. If you noticed, over the last, let's say, 30 years, the housing has gone up like 30 times, 20 times, especially in California. So in one sense, you're paying interest on the loan, but in another sense, your house value is going up at the same time you're getting value for that. You see, so it can offset on paper. Okay, make sense?
Yeah. Yeah.
And then they have life insurance. Most of them have life insurance policies. You know, $1 million, $5 million,
Right.
$10 million. They can take a loan off the life insurance. They can get 200,000 from life insurance off $1 million policy. Just take it off, tax free, and but they have a bill now. Their bill is they have to pay the mortgage right on their house because they took a loan
Yeah.
on the house. So now what they do? Now they rent out their house to whoever wants to, someplace in Beverly Hills, who knows? But now they're gonna rent their house to what? To pay the mortgage, right?
Yeah. Yeah.
They get the money from their house, the money from their life insurance, money from their mini bonds. But now since they rented their house, they have taxable income, correct?
Yep.
That's not actually true because what they do on their house, they have something called property depreciation. Oh, you write that down. property depreciation. And legally, what you can do, you can write off tax income on your property for residential houses is 27.5 years. 27.5 years. 27.5 years. And for commercial, it's 39 years. Write that down. That's to say that every 27.5 years, you have 100% structure, not the land, but the structural depreciation on your house. If you have a commercial building, every 39 years, you have 100% depreciation on your house. So you have $1 million. You have 27 years. So you put 1 million
Right.
divided by 27.5. You can write off $36,000 per year on a $1 million structure every year, tax-free money. So you made 36,000 on your rental, then that becomes tax-free because you offset the rental income by depreciation of your home.
Right.
But some of these homes are 10 million. So now you're depreciating $300,000 of tax-free income because of the depreciation value of it's like a tax loophole. So the point of the article was rich people don't have to pay any taxes because they know how to do the loopholes. They have specialized knowledge. That's what it's about. Same thing. That's what we're doing with stocks. I'm showing you the specialized knowledge to get income and to get benefits. And one of the specialized knowledge is the free trade. And the free trade means if you look at the pound here, it has a 30% requirement, Rohan,
Mm-hmm.
on the margin, which means that they're only going to hold 30% of the 8,500 that you pay for the shares.
Right.
But on the cover call, when you get 43%, you told me right now, you get 40%, you get 37 points, you get $3,700 back on the limit. That is cash you're getting in your account. That is not.
Yeah.
So they're going to hold 30%, and you're going to get back 40%. You're actually going to do a trade where you're going to actually increase your buying power. So you had nothing. You had nothing in your account. This is like unbelievable. Okay, nothing in your account, zero. You come in with 8,500 deposit. You buy 100 cents a pound here. They're only going to hold 8,500 times 0.30. They're only going to hold this much. So you're really going to have 8,500 minus 2,550. You're really going to have this much there just sitting there after you buy 100 cents a pound here. Because they're letting you
Right.
have less maintenance because you have margin. I'm not saying go on margin. I'm just saying they're going to take that less amount of money. And then you're going to get $2,700 back. $3,700 back for running the 3-year lead. You're going to have more buying power than when you started.
Yeah. Yeah.
That's called a free trade. And I want you to think about that. I want you to, you can only do one or two of them because if you do too many, you're going to end up going in the margin. But the value is that you're going to be able to do these leaps, and that's going to actually increase your buying power. It's going to give you the ability to do more trades, and your return's going to go up.
Up more.
And that's one of the reasons why you want to have get out of cash and go to margin, and also go from also apply for naked puts because it's going to hold less money instead of having to hold cash 8,500 to do a naked put. They're going to hold 2,500, 2,550.
Okay.
Questions?
So I'm going to listen to this section again more in detail.
That was a lot.
Yeah, it was a lot. So I need to go through that maintenance and at least go through this part and go through it again so that I can have more questions for next time.
Yeah, and I really appreciate that you are able to do these trades because as you go through the sessions, do the trades so you will have the experience along the way.
Right.
And that way, when the question comes up, you're actually doing the thing. You're getting the income. Palantir, Tesla, Robinhood. And then we can talk about it. And we can also do a session during the market hour so we can put a trade in. And that way you can see if you want to to advise on your trades and get the benefit of doing the trade in real time.
Okay.
Sound sound good?
Sounds good.
Any
Yeah.
final questions?
No final questions. I think
Thank
we're
you,
good.
sir. I'll send you the recording when we get it, and then we'll convene next Sunday.
Yeah, we'll meet next Sunday, same time. Right.